That's very
I'm
sweet.
so grateful to have this interview with you. And I wanted to welcome you to Solutions to Consider. I am Sophia Montoya with Keller Williams Hollywood Hills, and it is my pleasure to introduce you to a very experienced, very knowledgeable insurance agent, Ozzie Sussman, and this is Sussman Insurance.
I'm Ozzie Sussman. I am co-owner of Sussman Insurance. We're a family-run agency. We've been here for over 20 years in Brentwood, multiple locations. We do all types of insurance: home, auto, health, life, disability, everything. What we're known for, and the reason we work and have close relationships with so many realtors and loan brokers and escrow officers, is we specialize in making sure that when you're in escrow and you are going to be buying a home, that you can meet all your insurance contingencies, and have the contingencies removed in time, that you can get the right kind of coverage, that the bank will accept it, but most importantly, it's the kind of coverage that protects you and your family and the investment you're making in the house, to make sure you get the best value, the best coverage, the best price. There's things like the clue report that, a lot of carriers ask for. There's things like prior claims that the carriers will ask about when the seller is selling a home and there was a water damage claim 4 years ago and they want to know. So we take care of it from A to Z and prevent any issues in the 11th hour when escrow is going to close and the lender wants to fund the loan. So that's what we specialize in.
Yeah.
Right. Well, a cash purchase, you don't have a bank dictating what kind of coverage, how much coverage, when does the coverage need to be in force. If you're going to go rogue, you could say, hey, it's my money. I'll decide whatever I want to do with it. I don't want any insurance. I don't want anything. House burns down, you're out the money and you replace the home. So the difference is when you've got a cash purchase, the onus is on the buyer to make sure they do their homework and they get the right coverage, in place at the right time, so that when they're the legal owner of that property and the title records, that they have the right kind of insurance, not just in case the property burns down or there's water damage, but also if there's a liability issue, that they're the people that are responsible for that property. So that, cash purchase, again, the buyer needs to do their homework and make sure that, the buck stops with them. When you have financing, the lender has a lot of say in what kind of coverage you get, how much coverage you get. They can dictate what your deductible, what the maximum deductible is they're willing to accept. They also can dictate what insurance company they're willing to accept or not. Because as you know, there are carriers that are admitted, and then there are carriers that are surplus lines known as non-admitted companies. And a lot of times, depending on the location of the house, the size of the house, whether it's near a brush or fire hazard area, what insurance carrier will or will not write the policy. And so our job is to make sure that with buyers that we work as the middleman between them and the lender and the escrow officer and the loan broker to facilitate them being able to get the right kind of coverage that they need to be able to fund the loan. Because without insurance, the bank will not fund their loan. Insurable. And what determines whether a property is insurable? With my office, really anything is insurable. So I can find coverage regardless of what the issue is. The house is on stilts and it's in a brush area and it's 35,000 square feet. Or you've got a home that's had 3 previous water damage claims and no insurance company wants to touch it. Mm-hmm. So we can definitely find coverage for whatever the risk is. But speaking in the more generalities, the things that an insurance carrier looks at are, A, where is the home located? Is this home in an area where, it's in Bel Air? Is it in Malibu? Is it up Mandeville Canyon? Is it in Hollywood Hills where there's more likelihood of what they consider to be a fire hazard area? A lot of clients will get something called, it's funny, I'm trying to think of the words you guys use, but you get a report and it says whether it's in a brush zone or not a brush zone. And
Natural
it's like
hazards disclosure.
Yeah, the hazards disclosures. And so a lot of times that report will tell the buyer it is a fire area or it's a flood area, or otherwise it'll say, no, it's not. You can't base your availability of insurance on that report because what the insurance carriers use is a completely different set of criteria. And for those people who don't know what a clue report is, let me just back up a little bit. It's basically every insurance company submits all their claims to a central database. So when you go to buy a property, any claims you've had on your previous properties and any claims that are on the property that you're going to buy can be looked up in the central database. And that's what the insurance companies use to underwrite a risk. And so if this home that you're buying, it's a good way actually to know, has everything been disclosed? Because, you find that there was a claim and nothing was paid out, let's say 2 years ago. A lot of carriers will say, well, why was nothing paid out? Was the damage not fixed? And so what I always recommend is have records from the seller. Oh yeah, our dishwasher exploded. It was below the deductible of $2,500, but look, we did pay a plumber. They replaced it. All the remediation was done. There's no mold growing. We're good. So I can run a clue report and check that. The other thing they check with the brush is we go carrier to carrier and check to see who considers this to be a brush area and who's willing to write it or not write it. Sometimes certain carriers will just say right off the bat, no, this is brush, we won't touch it. Others will say, let me look at it. I'm going to go, they look at, Google Earth. They'll look to see what's the density of the brush, what's the access road to the property. They look at what kind of roof does it have, where's the next property located in relation to this house. So they look at lots of different things. Either way, we do the homework and the legwork to see, is it insurable in terms of brush? The other thing is that sometimes based on the year built of the home and the kind of renovations that it has, if you've got a wood shake roof, some carriers, I don't know, we don't want to touch that. If you've got, old plumbing, I don't know. Some of it is fixable because, hey, they're buying the house within 30 to 60 days of closing escrow. They've got contractors lined up to put in all new plumbing or to upgrade the circuit breakers or to put on a new roof. So those are things that we can work with. So basically, that's how you know, okay, this property is insurable. This is what it's going to cost. I can remove the insurance contingency and proceed forward with escrow. Now, back in the old days, before all the mortgage crisis happened in '08, we used to provide a quote to somebody, and when it was all said and done, about 2-3 days before escrow was going to close, I'd have an escrow officer contact me and say, I need an evidence of insurance. We'd provide it, put the loss payee clause on there, the loan number, the vesting of the property, and provide a policy. Nowadays, banks are a lot more picky. They don't wait till the last minute. As soon as they want to release loan docs or move forward to the next step, they need to know insurance is going to be in place. And so you get a lot of times where buyers are so confused because they have an agent telling them, I can't put a policy in force for you yet. You don't own the house. But the bank is asking to show proof of insurance. So that's the other thing is that we do is we will write policies and give evidences for a future date. So if we know it's closing July 18th and today is June 16th, we'll provide an evidence of insurance and then we'll keep following up with escrow. Is it closing on time? Is it closing on time? Are we on schedule? If there are delays, which many a times there are, then we just adjust that date and we don't bind it until it's actually going to close. But so we provide an evidence to the bank saying there's going to be a policy in force. You could buy a home in Malibu. It's only 1,500 square feet. But it has this amazing view. It's part of the Santa Monica Malibu School District. And the house is selling for $4.5 million for a 1,500 square foot house. And so, do you need to insure it for the purchase price? A lot of people think I'm putting this money in. So what you need to consider is insurance doesn't cover land value. So insurance doesn't cover market value. Insurance doesn't cover school district and the view and all the other things that come as part of the value and the sale price of a home. We look at what does it cost if there's a fire, this house burns to the ground or is partially burned. We need to demolish it. We need to remove the debris. Then we need to have architectural and engineering plans. Then we have to build back up, 1,500 square feet with this much plumbing, this much electrical, this granite, that marble, these closets, this, fixture. So they look at what would it cost to rebuild the structure. And so a lot of times, and this has been happening, is you'll get clients that say, the lender is telling me that I have to insure it for the loan amount. And so that's the other thing we do for people is we get on the phone, we talk to the lender and say, okay, let's get something straight here. You are lending money on a property and that includes land value, whereas the insurance doesn't need to do that. And so we work through that to make sure that people aren't overinsured because there's no point, for example, on earthquake insurance. Your deductible is based on the amount of coverage that you have. So if it's a 15% deductible, your deductible is 15% of, let's say, the $500,000 in coverage that you have. And there's no point in you having a higher deductible just because the lender is dictating that you have the loan amount as the coverage. So we make sure we work with clients to figure out what does it cost to rebuild. The other thing is that a lot of the carriers, most of the carriers we work with, will have anywhere between 150 to 200% replacement cost coverage, which means the house burns down. Let's say you have $1 million in coverage, and all of a sudden, for unforeseen reasons like increased cost of construction, or 2x4s cost more nowadays, or there's unforeseen demolition and debris removal costs, they will pay up to an additional 50% of the face value of the policy as a safeguard.
This is Solutions to Consider.